All righty, let's get started on the month-end review for April 2023. Had a great month in the Income Navigator portfolio this month with a return of $9,699 on trades. So nearly a $10,000 month. Pretty good for an up and down month in the markets. So let's take a look at what we closed out. All right, so on the ES 112 trades that we had 4 trades on. We won all 4 of those trades, so 100% win rate. Average day in trade on these is about 68.5 days, so a little longer than average. We've been pretty close to 55 to 57 days in trade. This month took a little bit longer to get out. And our premium capture or overall return in these trades was about 96%, 96.3 to be honest with you. And in total, we made $2,460. Now, the thing in each of these trades is we did end up closing all of the naked puts slightly early on each of these when they hit about 95%. So we closed a few for 50 cents and one for a 30-cent debit. So we did close the naked puts early and left the put debit spreads running all the way until expiration on these trades. So they provided a good hedge had the market gone south, which it did not. But overall, good month. Total for the year on these trades is $8,293 and averaging about 56 days in trades. And we have not had a single loser of this strategy. Next strategy to take a look at for the month was our weekly strangles on gold and ES futures. We put these on every single Wednesday, and we also take off the most profitable versions every single Wednesday on these. Now for April, we had 6 trades closed as opposed to the normal 8, because again, if you take off 2 trades, 1 gold, 1 ES every week, and you put them back on, you should have 8. Well, the reason we didn't have 8 come off was back in March, we had a couple that we got stopped out on, which was our first stop outs for the year last month. So we waited until the following Wednesdays, which is when we put these on and take them off, to put the new strangles on. So now we're back up to having 8 on each. We did close 4. Of the 4 we closed 2 on gold because we had gotten stopped out on 2 gold strangles, but we did close 4 ES strangles because we did not get stopped on any ES for this. So good return overall for the month. Here, $4,573, averaging about 31 days in trade, which is what you would expect, that we would take them off roughly every 30 days. And the average premium capture on these was 54% for the month of April. So continuing to do well on those particular trades overall for the year, despite the stop outs in March on a few when we had a couple of the gold trades really explode due to volatility expansion and some drops in gold. So we stuck to our mechanics, and we're back in the winning ways and still up for the year on these. Next strategy is the strangles on futures for the month of April. We closed 5 trades in April here, and we had won 4 of these, which 2 oil trades, 2 CL, 1 on the Aussie dollar and 1 on corn. So 4 winning trades, and then we had also lost 1 on corn futures as well. So overall, a good 80% win rate. Average days in trade for these was 38 days, so pretty typical of what we see for our strategy. 38 days on these, and overall premium capture was 20%. The reason for that was obviously that you had a loser in corn that we took out on this strategy. So great return, $1,429 on these trades, and continuing to do well for the year on our strangles on futures. Next trade strategy here is our coverage strangles, and our coverage strangles, something that we've been putting on for several months now. And in order to enter these strangles, we're typically taking a naked put on MES, sorry, naked put on MES, somewhere around the 12 delta, getting around 10, 11 bucks. And then I go about 30 to 50 points lower. 50 points is pretty much the standard. 50 points lower for a second naked put, simulates a covered strangle. And we have not gotten assigned on these for the couple months that we've been in them. We closed 4 of these. So all 4 trades were winners, 100% win rate. We averaged about 10 days in trade. We're putting these on pretty close to 18 days. So we put them on around 18 days, and we've been closing them with about 10 days left. About 8 days left. So about 10 days in trade overall for the strategy. And overall return for the month was an 80% premium capture. We did close them obviously early, did not let them expire, but when you're at 80% after just 10 days out of 18, there's no reason to hang on for another 8 days to try to eke out 20% and put yourself at risk. So covered strangles doing well here. Let's take a look at our Amazon trades. So in the Amazon trades, we lost money, but this is pretty typical of the strategy. Lately, it's all good. The trades were closed. We're 6 trades in Amazon. Now, just a quick update on this strategy. The Amazon strategy, we have a synthetic stock position, which means we are short puts, long calls at the $100 strike. And then we have been writing covered calls against it nearly every week, every 3 to 5 days out. Now, we closed 6 trades. We won 4 of those. So the 4 we won, 2 of them were covered calls that we took off for full winners. 2 of the losers were covered calls that we took off for losers because the stock moved up. Well, the synthetic long stock that we have went up way more than the losses on the covered calls. So I'm all good exchanging some small losses on the covered calls, considering that the overall position continues to gain money here. We also, one of the winning trades was a naked put in Amazon at $89. Or sorry, 89 strike. That was a 50. We took that off at 50% in 14 days. Winner. We also had a put spread in Amazon, a 97.95 put spread in Amazon that we were in for 10 days on that trade, and we took 50% out of that trade as well. Now that was an 18-day trade. We took it off in 10 days for a 50% winner. So small loss in this part of the account. It's all good because then, with the covered calls being the small losers, that means the synthetic stock position continues to climb higher. So it's a good trade-off, and we're going to hang on to that position. Now let's take a look at our leap puts. So loving these trades, been doing well on the leap put trades. So April was the best month we've had. We had 13 trades closed. We won 11 and lost 2. Now, the 2 that we lost was a small loss of $48 on Uber and a small loss of $50 on Walgreens Boots Alliance. The reason I took those off is that we had been in those trades for about 72 and 78 days, respectively, and we were basically flat. I felt it was better to just close those for a very small loss and redeploy capital elsewhere. So we ended up, though, with 11 of these closing, which is an 84% win rate, which is fantastic. We're averaging right now about 52 days in trade. It's a little longer than I'd like, but it's still good. And we're averaging around 23.6% return, again, taking into account those 2 losses. But all of the winners, we've been taking off at 30%. So we take the winners off at about 30%. And I'd like to see that 30% come in about 30 days, but because of the market being down a bit for the month of April, it took a little bit longer for these to hit. So we'll take 52 days in the trades to make 30% on these trades. So 11 winners. We had 11 winners on. We had SPY puts, which is our favorite. So we've been doing SPY every single Monday, been putting a SPY leap put on every Monday. We had winners in other ones in Oxy, Schwab, Shopify, Costco, Zoom, AbbVie, Enphase, and then also in Amazon. So good winners on the leap puts, doing very well on those. And then finally on some spec trades that we had for the month, we had small loss on our spec trades. We only closed 7 out for the month. 3 of those we won, 4 we lost, about a 43% win rate. A little bit, just a really mixed. Average premium capture, though, was about 23% on these trades for the ones that we did have overall, but we lost $632. One of those was a put spread in oils and CL as oil has been selling off. We're going to have another loss in May on a put spread in oil as oil has just continued to sell off pretty well. We had a 112 trade in nat gas, which was a fantastic winner. That was a 388% winner for over $1,900 in our favor. Another loss was on a SPY hedge put that we had bought that we let expire. And then we also had a 1 DTE iron fly that we lost a little bit on, and we had a put spread on SPX that we lost on as well, which was a 0 DTE trade that we put on. And then the other 2 winners were a Boeing put spread that we won on. That was a 52% winner in 11 days. And we had a McDonald's put spread that we also won on, which was another 50% winner, and that only took 4 days. So overall, just mixed on that, but overall gives us a pretty good return on the month. So $9,699 in the month of April for the Income Navigator trade. If you want to learn more about those strategies, you can message me or you can check out Mr. Top Tick, the Income Navigator service. All right. If you can, like and subscribe to this channel. We'll be posting a lot more trades coming up. All right. Enjoy a great rest of your day, and we'll talk to everybody later. Bye-bye.